2016 and 17 saw some major disruptions in the real estate sector. You had Demon, RERA, and of course getting used to GST regime. 2018 was to be the year of stability, and the hope was the demand in India's housing sector will rev up, sales will bounce back, and commercial leasing will see very strong days, along with new sunrise sectors like warehousing, which will add to the cheer. But has the year panned out as expected? And what does 2019 hold in store for India's real estate sector? Before we get those answers, here's the year gone by, summed up by Ashwini Priyolkar.
Like every year, affordable housing remained the major theme driving the residential sector. While sales picked up in the top 7 cities by 16% compared to 2017, the average property prices remained largely static. The new launches across top 7 cities increased by 32%. According to the data by Anarock, average property prices at the pan-India level saw only 1% increase in 2018 as against the previous year. The share of affordable housing or homes priced at under Rs 40 lakhs was a whopping 41%. In absolute numbers though, it was still under a lakh of homes launched by India's private players in the mid to affordable segment.
The residential segment, obviously, across the entire real estate sector has not been done as well as I would have liked it to be. But there is no doubt about it that we have seen in the last 4 months an increase in the business. So there is a positive indication for the business on the real estate side, but it's not across the board.
Large reputed developers did clock strong inventory uptick in the Dussehra Diwali festive season, but the rev up in sales was not uniform across the board. The elephant in the room still remained the unsold inventory of 6 lakh plus units across the top 8 cities. What's more, RERA rollout in most states didn't really dent the relayed projects number in any significant way. According to Lysis Forest, we are closing 2018 with 5.86 lakh units delayed for more than 24 months. The year also concluded with the fear that this number could rise further now that non-banking finance companies have slowed down their lending to the sector.
The developers so far were sustaining through capitalization or through more money from the NBFC or loans rather than sales proceed. Right. So it's important for them to increase the sales. And to increase the sales, the price is the biggest barrier. NBFC crisis which has emerged, actually I would say that this can probably may trigger a price correction if the more capitalization doesn't take place.
While the private sector is grappling with its own challenges, the government claims remains upbeat. The housing minister says that his government is on track to meet housing for all goal way before the deadline of 2022. Data accessed by CNBC TV18 shows that only 12 lakh homes have been completed so far. That is just 12% of the targeted 1 crore homes. The figures highlighted by the government are 65 lakh homes sanctioned so far under PMAY.
Move out of the housing sector and you see that India's real estate did have its moments of joy. The buoyance in India's commercial and office space was definitely the silver lining. Anarock reports total office absorption across the top 7 cities is geared to cross 39 million square feet in 2018, given that 28.2 million square feet were absorbed until the third quarter. This denotes an annual increase of 19% in absorption. And if the trend stays strong, the country can look forward to its first REITs listing in 2019, given the developers the much needed liquidity through this asset monetization route.
I would say over a period of last 5 years, the commercial real estate has seen fair bit of stability and growth as well. If you look at the numbers, 9 months ending in September 2018, the sector has seen a growth of 18%. It's largely driven because of the economic growth that we are witnessing in the country, the demand for category office, and a very low vacancy that we are seeing.
As 2018 comes to an end, it's quite clear that India's real estate is far from what you can term as stable, because all the king's horses and king's men could not put Humpty together again, which in our context is the residential sector, which makes up for almost 80% of India's real estate. In Mumbai, Ashwini Priyolkar. So what went right, what not so much, and what lies ahead? We have India's leading voices with us on The Real Deal today. We've got with us Khushru Jijina, MD Piramal Capital and Housing Finance, Also with us, Anuj Puri, Chairman, Anurag Property Consultants, and Anshul Jain, Country Head and Managing Director of Cushman and Wakefield. Mr. Jijina, I'm sure, first of all, you're expecting the first question to come to you. I'm going to steal the line from the Anurag report, which landed in our box last evening, which says, NBFC crisis holds the sector at gunpoint as 2019 begins. Do you agree or do you differ?
So let me answer it a little differently. In fact, it was a few months ago that in our group, our chairman and even myself have been saying that there could be some problems in the NBFC with the way the several new NBFCs were mushrooming. Of course, the problem which really started was really something very surprising because it started with ILNFS, which is actually not an NBFC. Having said that, yes, last 60 days, as I've been saying, it has been a self-inflicted type of a situation which has been created in this country, in the NBFC sector. But I'm happy to say that all the larger players like us are back. It's back to normalcy. You've seen the CP market back, which has stabilized, and NBFCs like us have actually started lending as business as usual today. So I really don't see this issue playing out from January onwards. Yes, there will be issues with the smaller NBFCs or NBFCs who have not followed the right model of the NBFCs and who have been lending left, right and center without understanding the risk-adjusted return. They could definitely have a problem, which is actually good. It's like the real estate industry going through consolidation. We believe that even the lender in the NBFC space, there will be consolidation, but nothing to really worry about because the large NBFCs like us are back in business. So this was just a temporary hiatus.
When you say back in business, Mr. Jijina, when you say back in business, you were clocking a disbursement rate of about 1,500 to 2,000 crore a month. If I'm not mistaken, that's the figure we spoke about at the CREDAI meet. What is it today?
So as I said, in the last 60 days, since there was a mayhem, the lines were, as you know what has happened in the NBFC state. Please understand, before I answer that, you will appreciate one thing, that all of us are an ongoing business. It's a business which is going on, whether it's NBFC or a corporate. So when you borrow the money, you're not keeping it in a bank account. You are actually on lending it. And suddenly when the bank lines are overnight cancelled, obviously you have an issue, and that's what actually happened. Because there was a sudden lack of confidence. It was not a lack of liquidity, it was a lack of confidence because of the ILNFS and the DHFL issue which happened. And then there was a panic, which slowly has got converted into normalcy now. So let me just even talk about the CP, since you have given me a chance to talk about it today. Again, CPs by very nature are not bad. Please understand this, that at the end of the day, no NBFC can only work on long term. You need short term, because if you really go into the little detail of all NBFCs, you will see that a lot of money actually gets prepaid into the system every quarter on quarter. So you just can't have a liability mismatch on the other side, that you have borrowed long term and you get your money back quickly. That is the point. But yes, I do accept that there were various NBFCs who went far beyond the normal norm of borrowing in short term, and that is where the mismatch happened. But otherwise, for organizations like us who are managing their ALM, this was a temporary issue because suddenly the lines got squeezed. You will appreciate that.
Okay, so you're saying it's returning to normalcy. Anuj Puri, barring the fact that for a couple of, let's say, days, we could say 30 days, 40 days, liquidity went cold turkey here, but what I'm hearing, and this is from inside sources of some of the largest lenders in the country, right? I am not at the liberty to disclose the names, but they are saying that the worst for the sector on the liquidity front is far from over. There are lots of toxic assets, even in the books of larger NBFCs, which haven't come to the forefront. What's your view? Is the worst over on liquidity or not yet?
So Manisha, first of all, it's a delight to be on your show, one. And second is, I tell you, I really enjoyed the way that you opened the show. It was such a comprehensive analysis of what have gone on in 2018 that, I was like in awe of every word that you were saying. So, beautiful summary. Taking on to your question is, a lot of it has been summarized by Mr. Jijina. I would add two more things on the question that you asked. One is, is it over, as Mr. Jijina said, is that, perhaps not, because, there are lots of smaller NBFCs who would fund it previously, or there are other NBFCs who did not follow the norms and today are not being able to fund it. So clearly the liquidity is not come back to the same level. as what it was prior to September, given that the smaller NBFCs and perhaps some of the other NBFCs have gone a little quiet than Piramal Capital. The second is there toxics in the book? I think it's a way of doing business, Manisha. So would there be some assets that are going to be stressed in the books of many of the NBFCs? I have no doubt that they will be. But you will have to work on those assets. And I think today, if you were to ask me, many of these NBFCs are working extremely hard with their partners to be able to take these assets out of the stress. One of the things is what they're working is bringing in a stronger developer and saying is get engaged with a weaker developer. Take a development management, joint venture, joint development. Stronger developers' name is still selling. They have an ability to project manage. They have an ability to raise capital. And we are seeing many of these NBFCs working overnight to be able to liberalize their portfolio and say is if there is anything that is stressed, we're going to be able to work along with the partner to bring it out of the stress rather than saying is, give my money back. I'm not going to participate. So I've enjoyed these 60, 75 days because I've seen true partnership coming out between the funders and the developers rather than saying is, look, it's your mistake, it's your mistake.
I'm glad to hear that analysis, Anuj, but let me toss the next question then to Anshul. So Anshul, I'm glad to hear that at least the NBFCs haven't gone around tightening the noose around the developer's throat. In fact, they're thinking of creative ways and of partnering with the developer. Is that ye dosti, which I remember, which was spoken about by Mr. Jijina at that conference, big conference that we had in August. Do you really believe now that the developers will ride out, whatever might be the crunch or the crisis, they will ride out this period and we are heading into a much more normal 2019 or stable?
See, you've got, Manisha, when you started the show, you said there's 600,000 units which are unsold and approximately the same amount which is sort of under construction but delayed. I think that is likely to continue to put serious pressure on the whole sector, including the NBFC financing sector, right? And as Mr. Jijina said, it's very likely that the large NBFCs who've taken the right risk-return profile for their investment portfolio will survive, but the smaller NBFCs will continue to struggle. I think in light of that, the only thing right now that the NBFCs, that's really the only option is to really, and sensible option is to partner with developers, helping them in a manner where the projects are complete and then, helping them with a sales, to make sure the sales happen. And for that to happen, partnership with the larger developers, what Anuj was talking about, partnership with more credible names is extremely important. So it's good to see that, unlike a couple of years ago when most of the developers and smaller developers, whether they had the ability to build or sell, irrespective of that, they were holding on to their portfolio, now are open to such partnerships, which are probably forced by the financial system crisis. And we're seeing much more of those partnerships happening. Even when people are selling land, so the land owners, they are now much more careful of who is the developer that they are partnering with. Do they have the credibility to build and sell? Let
me come to the next question then, Mr. Jijina. So how do you see the housing market in 2019? So we saw, literally 2016 was the worst in terms of the numbers of new launches and sales. But the 32% uptick that we see is not from a very strong base of 2017. Going forward, what's your own sense? Will new launches accelerate, especially in the affordable housing segment? Have the sales met with developers' expectations? And what do you hold in terms of pricing? Is it going to remain flat, or are we actually going to give developers some pricing power back?
So let me answer it again. Let me start with what is happening 3 years back. I think it's very important for all of us to understand the context of what this industry is going through, this transformation, which I've been always talking about. The transformation, as I'm saying, is it's moving from an industry which was not really bothered about the customer. It's really moving into that, and consolidation is actually happening. You spoke about the disruptions, but this actually happened 3 years back when RERA was announced, And that's what I've been saying for a long time, that consolidation will happen, and you are seeing it happening. In fact, this point which both Anuj and Anshul also raised, my point of view, which actually I was talking to when I was talking to the investors after this NBFC crisis, the point was that actually this is good for the industry in the long term. Why? Because this consolidation was also not happening fast because of the smaller NBFCs feeding on the developers who are really to be married to the bigger developers, as Anshul rightly said. So that was not happening because unnecessarily, oxygen was being provided by the smaller NBFCs. Actually, today, if you really look at, if you really dissect, the problem is that we all talk about the real estate industry at a 60,000 feet level. If you really dissect what has gone wrong, just let me talk about it for 2 minutes. You rightly said that 80% of our real estate is residential. I agree, that's absolutely right. While the 20% is doing well, the 80% is residential. Again, in the residential, what has gone wrong? It is the luxury projects with volume which has gone wrong. The smaller luxury projects have not gone wrong. The mid-market has not gone wrong, and the affordable has not gone wrong. So if you really dissect it, and if you ask even Anarok or anybody else, they will tell you that these sales are actually, the launches are happening. I was reading in the papers today that 600 crores worth of products were sold in Navi Mumbai yesterday itself. So the point I'm making is that going forward, what's going to happen is that mid-market and affordable will continue to do well in 2019. The stronger developers will become stronger. You will see consolidation happening faster. I also have a viewpoint that, while Anshul and Anuj did speak about the marriage, which we ourselves do, I always say that we are doing more marriages than lending. But I am also of a belief that there will be several projects. This is an important point to note. There will be several projects which will be left unfinished because you cannot have all projects getting married to everybody else. So as a layman, when you walk around the city or you go around the city, you will see unfinished projects, Manisha. But that doesn't mean that the whole industry is suffering. Let me give you a data point. We spoke about a data point for Piramals. I'll share it with you today. That typically we are, though we are one of the largest lenders, we are 1.3% of the market. We are only lending to 1.3% of the market in which we are operating. It will shock you actually. But the more important point is that our developers, the one which you are backing, are doing 8 to 9 times of sales of the others. So you again, the problem is of this average which you all talk about, the liases forest data. Let me again talk to you about the supply, which is very important. You are talking about a supply, everybody talks about a supply, but if you again dissect it, the good developer supply is not more than 2.5, 3 years. So otherwise, the MMR region is more than 9 years supply. But the folly is that we keep on doing these averages. Don't do it when the market is moving towards a consolidation. So please, my request is that please don't look at it from a 60,000 feet.
Stop looking at if the industry starts giving us data which is more dissected, more nuanced, I promise you, Mr. Jijna, we will take it. I mean, we don't want to create any panic and we don't want to say that everything's gone to the dogs. Not at all. That's not the intention. Very quickly, Anuj, before I take a break, new launches likely to be better in 2019, and will developers get back some pricing power?
On those two answers, Manisha, it will be muted. I don't think that it is going to go up in the first half of 2019, the launches. And second is on the pricing power, it will continue to remain the same as 2018. We do not foresee a huge jump on the pricing. I'll say one other thing before we go into the break is that on the sales, whilst the numbers will look similar in 2019 as 2018, but just to elaborate on Mr. Jijina's point, you will see more sales of good developers. Whilst the numbers of the units may be same, but more sales in good developers than the bad developers. So overall at 60,000 feet, you may say that it's the same, but as you actually dissect, you will see is that the market would have moved on to quality developers.
What lies in store for India's real estate sector in 2019? One of the key contributors to the economy, GDP, jobs, homes for people to stay in, and places to work. On The Real Deal, we have India's top voices helping us with some crystal gazing today. Mr. Jijina, I'm just now going to move to the other part of your portfolio. You've taken some hospitality bets. You've said that maybe you look at that sector a little bit more. I know we keep harping on the housing sector, but tell me, I mean, in 2019, other than the office space, where else do you see big traction, and where will your money flow?
So I think a couple of areas which we have, in fact, in the last 60 days taken advantage of already. One is the housing finance, because there have been certain housing finance companies who have got into trouble, as you know. I don't want to name them, and we have taken full advantage of that because our model is B2B2C. So we do our housing finance where we lend to our developer for completing the project. So this actually has been a great, huge advantage. We have put a lot of money in the last 60 days into housing finance, so that will continue. You will see us growing our housing portfolio far more than what I would have envisaged 60 days back. The second other interesting area is warehousing, which in the last 6 to 9 months we have started doing, and we have actually started seeing the results. So we will actually step up with a lot of developers and in fact a lot of sovereigns who are moving into warehousing thanks to the GST coming in. I think that's an area to watch out for. Commercial and hospitality, we continue to do well, and definitely commercial and hospitality, you will see a lot of action from our side. Besides, of course, let me not say that doesn't mean that we will not be there on the residential side. We'll continue to hold our partners' hand in their development.
Fair enough. So summed up well. Very quickly, Anshul, office leasing market, and I've got the Cushman data there, looking pretty good in 2018, record high in terms of overall leasing volumes and leasing demand. But my only one worry is that you also are going to now see a big addition, or 2018 would have actually added about 40 million square feet of new supply. How do you see the demand-supply equation in 2019, and do you think will it put any pressure on the yields, rental yields?
The demand's pretty robust, Manisha. So if you're looking at supply, which is completing at a rate of circa 40 million square foot a year, the demand's actually right now, the gross demand is actually exceeding it. And why is gross demand exceeding it? Because there's a flight to better quality real estate, better quality office space. So the new space that's coming up, which is better quality, or the existing space which has been maintained well and they've maintained the quality, a lot of demands are actually moving in those areas. The new sectors which are coming up are effectively your fintech, your health tech. The co-working spaces have taken significant amount of space. And the other bit which is likely to continue in 2019 is the resurgence of the IT sector. So if you remember in 2017, after sort of the whole kind of Trump taking over and the threat of artificial intelligence, I think 2017 was a bit of slowdown in the IT sector, but 2018 has seen a sharp bounce back because the IT sector has also reworked its demand for space towards more value-added areas such as data security, such as global innovation centers, and of course somebody building up the backbone of the artificial intelligence that's changing the nature. So I think all those things will continue in 2019, and we are very likely to see a further increase, a steady increase in rental given the demand for good quality spaces. And therefore I think for a portfolio of investment portfolio where you know the buildings are in the relevant areas and the quality is good, I don't see any pressure on yields.
Okay, no pressure on yields, no supply glut just yet. In fact, I'm just looking at the latest deal. Google picking up over 1 lakh square feet in BKC, International Finance Center. Look at the number of deals itself, large deals, which corroborates your point, Anshul Jain. So, last point to you, Anuj, enough confidence then amongst large global investors to take a long position in the Indian commercial market and subscribe to the Blackstone Embassy REIT, which we might see in the first quarter of 2019?
So I have no doubt that there is enough confidence, enough and more capital that is chasing in here. The story is very strong, not only on the commercial or the retail, but even some of the new sunrise sectors, as Mr. Jijinia said, is warehousing. Anshul mentioned about co-working. I also think, as Manisha, there will be two other segments that 2019 you will see traction coming in. One is student housing. I mean, it's a big segment when you go to the US or UK. And the other one is rental and managed living. You know, the youth today do not necessarily want to buy. They are very happy to rent it out, but they want it fully fitted out, fully managed. And this is a big part of the business in the US, multifamily homes. I do feel is that as the rental yields on the residential continue to go up, with furnished and serviced accommodation, you will see this becoming a portfolio of many of the institutional investors.
Wow, fantastic. So the likes of Nestaway and Stanza have some good days coming, I believe. We in fact did a whole Real Deal show on it last week, and we actually found out that even Lemon Tree is looking at that space very, very closely. Gentlemen, I'm going to thank you all for being here with me and wishing you all the very best. A lot of business success in 2019. Thanks so much for joining me.
Thank you, Manisha.
Thank you very much.
Thank you.
Thank you.
Thank you.
Well, with the year 2018 expected to close on a record high in terms of overall leasing volumes and leasing demand, commercial looks to be on a strong footing. When it comes to housing, I'm going to keep my fingers and toes crossed. Not just the good developers, of course, they will continue to do well, especially with financial indiscipline going out of the market. More importantly, I'm hoping that the stuck home buyers, definitely between Courts, RERA and IBC, see some concrete plans of their home's completion. Thank you very much for joining me and all the very best. Good luck for 2019.